Hello traders and welcome to another video review. Today is Friday, the last day of the October 2025. Friday is the end of the trading week, end of the trading month as well, so please stay focused, stay tuned. But first, let's take a look at the economic calendar for today. Overnight Asian session was quite important and busy with data releases. We got data from Japan, job applications ratio, Tokyo Core CPI up from 2.5 to 2.8, industrial production up from minus 1.5 to 2.2%, retail sales and so on. So mixed bag of data. PPI in Australia is up from 0.7 to 1%. And data from China. Data from China are quite interesting. Manufacturing PMI in China down from 49.8 to 49, and the composite PMI down from 50.6 to 50, and non-manufacturing PMI barely changed, 50.0 versus 50.1. So not that good data from China either. German retail sales in line with expectations, 0.2%. Data from the UK, nationwide HPI beats the expectations of 2.3% with the 2.4%. Retail sales from Switzerland up from minus 0.4 to 1.5%. French CPI in line with the expectations, 0.1%. We are still waiting for the Polish CPI, which is scheduled for release at 10 o'clock, and Italian CPI, which is scheduled for release at 11 o'clock, together with the major event of the London session, which is the Eurozone CPI, scheduled for release at 11 o'clock as well. Monetary policy meeting minutes from the National Bank of Turkey are scheduled for release at noon, and then we enter the US session. Core PCE price index is scheduled for release at half past one. Employment cost index scheduled for release at the same time. PCE price index scheduled for release at the same time, together with the personal spending. Data from Canada. GDP of Canada is scheduled for release at 1:30. Chicago PMI is scheduled for release at 2:45. At 4:30 we got Atlanta Fed GDP now from the US, and other data are FOMC member Bostic speech at 5 o'clock. At 6 o'clock US Barker Hughes oil rig count and total rig count. So today's day is very busy. Asian session was very busy, London session looks busy, and the US session looks busy as well. So please, again, stay focused, stay tuned. But first, let's take a look at the charts. We'll start with euro dollar. Euro dollar for our time frame chart is approaching the double bottom level just as expected. We are shy of 1.1548, 1.15, roughly again 5 pips shy of the test for the technical support. With this kind of a negative momentum, the outlook remains bearish, and only a strong breakout above 1.1669 might be considered bullish. This level here, which is located at 1.1584, 1.1577, will be now considered as a local technical resistance because it now gets violated. So the situation here develops as expected. More downside to come on euro dollar. British pound finally hits the target for the wave Z. So the situation here with this complex price and time cycle, as you can see here on a labeled in a black ink, WXY, WXY, X and Z, is now completed into the extremely oversold conditions. Nevertheless, the market is still in strong bearish pressure, and all of these levels, which are above the current price, 1.3141, are now the technical resistance. If we switch to daily time frame chart, you can see that this is the last level from support. It's from May 12, 2025, and there was some sort of the level here at August 1st, 2025. So now it's violated, a little bit violated. and it looks like this market wants to go lower. In that case, our corrective cycle will be basically invalidated, and something else might be playing out, which is even more complex and time consuming than the current situation on the chart. However, please take a look. Daily time frame chart is oversold as well, right? RSI just hit the level of 29 points, so maybe next week it is a time for a small pullback higher. For now, negative outlook prevails. US dollar versus the Japanese yen finally breaks above the swing high from October 10th, 2025. So right now this will be the technical support level, 153.28. Local high was made at 154.46 as the US dollar is getting stronger across the board. You've seen the euro dollar going down, cable going down, and the US dollar versus the Japanese yen coming up. Gap is still not filled. However, we hit the extremely overbought market conditions, and now the market might be continuing higher. The target is 154.84. Please expect there is just a little bit of room to the upside. There's no room to the upside already on the RSI, because we hit the level of 71 points. So maybe some spike to the upside, and then some sort of the pullback is next for the US dollar versus the Japanese yen. Let's take a look at the gold. Anything new here? Not too much new progress on gold. 100 periods moving average on 4-hour time frame chart is now flat, located at 4,106, and the price is oscillating around the level of 4,000 and oscillating around the neutral level. So bulls are waiting for the trigger to continue the uptrend on the gold so far. Last but not least, let's take a look at the Bitcoin. The Bitcoin is still inside of the trading range, still below this now a little bit wider supply zone. Local low was made at 106,293 into the extremely oversold conditions, so the price jumped a little bit towards the 100 periods moving average. Nevertheless, the key key technical support has not been tested just yet, and the market keeps moving up and down in a sideways trend, located between the supply zone and the technical support. So no breakout yet, but the market participants await the continuation of the movement. Please notice that there is over 10% correction in the background, very strong, very dynamic, and this is just some sort of the sideways trend. So as long as we trade inside of this range, below supply zone and above the technical support made of the swing low from the October 11th, the outlook remains sideways, and the market should be going from the extremely overbought to the extremely oversold conditions, up oscillating around the 100 periods moving average until some kind of a trigger will make this market to move somewhere else. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.